Hello, everyone. I'm Brian Love, head of banking and fintech at Travillian. We're a talent advisory firm serving community banks all over the country. It feels like we've entered a new chapter for community banking. Just a few years ago, the focus was on navigating deposit competition, rising rates, and heightened regulatory scrutiny. Today, the conversation has shifted. Capital markets are reopening, M&A activity is gaining momentum, and banks are once again looking beyond defense toward growth. But this isn't a return to 2021. Investors are rewarding disciplined execution, consistent performance, and leadership teams with a clear vision for creating shareholder value. Access to capital matters, but the ability to deploy it successfully matters even more. Today, we'll explore what separates the banks that earn investor confidence from those that don't through three distinct perspectives: the capital markets, the C-suite, and the investment community. The capital markets perspective is from my co-moderator, Matt Shields from Performance Trust. How you doing, Matt?
I'm good, Brian. Thank you for having me. As you mentioned, it's a really exciting time for the markets. The markets have been behaving for some time now, and access to capital for banks of all shapes and sizes has been flowing of late, which is really a lot of fun and great for our investor network.
That's great. We're going to get into that quite a bit more. We have also an investor's perspective on what drives valuation, what erodes it. We have Michael Howard from AllianceBernstein. Michael, nice to have you on.
Hey, thanks for having me, Brian.
So an operator's perspective from a growth-oriented community bank that Travillian knows well, CFO and president of Minnesota-based Bridgewater Bank, Joe Chybowski. How are you, Joe?
I'm well. Thank you, Brian. Thanks for having me.
Well, I can't wait to engage all of you on this conversation. And Joe, I'm going to go straight to you on this question. So again, what we're seeing, capital is available again. M&A conversations seem to be popping up and are back. Investors are more selective than they've been in years. So what separates the banks that can capitalize on this market from those that can't? What is your perspective, Joe?
Yeah, I mean, I think you alluded to it a little bit in the opening. I think first and foremost, it's credibility. I think Bridgewater specifically, I mean, we've definitely partook in a lot of different forms of capital, but I think most importantly, the number one question that we have to answer is to our investors, Mike being one of them, is really what's the use of capital, and you build that credibility over time. You can erode it pretty quickly too. So I think for us, that's first and foremost the credibility from investors, and then the use of it. I think a lot of times, investors are looking for a catalyst, a specific event, a growth prospect. So I think really telling the story, some of that again can be built up and part of the narrative over time. Some of it can be new, and so a new business line, a new market. So I think a lot of that you gotta tell the story around it. And so, for Bridgewater, it's evolved over time. I mean, I think if I go back to, we started in 2005. Jerry Bach, our principal founder, raised capital based on growth, but a lot of times it was kind of just-in-time capital. And then really starting in 2015, after a series of capital raises, we first brought in kind of external investors outside of the market. And that began kind of how we had to really kind of formalize our capital raising process. It couldn't just be, hey, we're going to double in size and support our local bank, but it really, had to be more thoughtful. And so 2015, we brought in some private equity, 2016, and it became very apparent at that point that, going public was, larger check size. And so we went public in 2018. And then since then, we've partook in various capital raises, common, preferred, sub debt. So,
Hey, Joe, I'm kind of curious. So today's markets, it seems like, are pretty wide open for all types of issuances. The debt side of the house, sub debt, senior debt, spreads are as tight as they've ever been. As we look at equity valuations, a lot of bank stocks are at 52-week highs or all-time highs. What is the conversation like within the boardroom, within the executive team, as you guys decide, hey, we're going to issue sub debt or prefer or common equity, all of which you guys have done? How different were those conversations internally as you think about capital allocation, and what is the right form of capital for you guys in your bank?
yeah, I mean, I think it's always on the table. Everything's on the table. I think you got to be, I'll keep saying the word optionality. I think you really got to have everything at your disposal, because the market changes so quickly, as we know. if I just look back over the last, 5 years even, we went from like the highs of 2022, where we hit an all-time high in terms of equity values from Bridgewater's perspective, to like literally 6 months later, hitting an all-time low with kind of the liquidity crisis. And so, I think you got to be armed, and the board has to be comfortable with kind of all avenues, and you got to keep the board and management around each form of capital, and how it impacts the institution and what you want to do. And so, we went public, like I said, in 2018. I would have thought by now, 2026, that we would have raised common equity, being a growth company, growing at a mid-teens clip. And we have yet to do that, not by choice, but more just by the market changing. And so we've had to be a lot more, creative in terms of supporting the growth of the organization, to your point, through sub debt, preferred. Those markets are all going to ebb and flow and change. And so, for us, it's evaluating at that point in time each capital instrument, and ultimately, what best supports the institution. So when I go back to when we raised sub debt, in 2020, at that point, like, the equity markets weren't open from our perspective, or really the broader markets, but rates were still extremely low, and it made more sense for us to bring in some subordinated debt, for kind of the COVID uncertainties. And then you fast forward to 2021, we're still at the lows. We've gotten through COVID uncertainties. It made a ton of sense to raise preferred equity at that point because spreads were so tight. So I think, the environment's going to change. Most importantly, you got to have all your options open, and you can't bank on one versus the other, because the market is the market.
Yeah. Mike, you've been investing in Bridgewater for years, as well as hundreds of other banks. What does the pulse of the market feel like to you today relative to where we've been and maybe where we're going?
No, I'd agree with your opening comment. Capital's flowing. The markets are open, at least selectively open. We've seen some bank IPOs this year. We've seen private placements by privately held banks. We've seen some pipes. So we're seeing mix, and that's just in the common equity space. Obviously, the debt markets are wide open. So I'd say markets are as open as they certainly have been in the last 5-6 years.
And when you and your team are evaluating new opportunities for banks maybe you don't know as well, kind of what would you tag as the most important items you're focused on for that institution that makes it a viable investment for you in AllianceBernstein?
Yeah, without trying to go too lengthy, just a couple of fairly obvious things that an investor's looking for here is track record, ability, kind of empirical ability to perform in a variety of environments over the cycle. So over the rate cycle, over the credit cycle, is this a bank that can deliver results for common shareholders over time, and compound value for shareholders that way? Another thing we kind of look for, and it goes hand in hand there, is kind of owner operators, management teams and boards that think like shareholders because they are shareholders. They've chosen to put their own money in many cases. There are incentive compensation plans that also forge good alignment between the management team and shareholders. Those are some of the things that are very important to us.
I was just going to jump in, because we did some work for Bridgewater finding great talent, Joe, and my primary contact there was Mary Jane Crocker, who I know has exited the executive team, is now on your board. But the one thing about Bridgewater, which actually dovetails to what Michael just said, is that your culture is like unto itself. You have a very young nucleus of talent. I think the average age of your employees is like low 30s.
34.
34. Amazing. And it just seemed to be an absolutely entrepreneurial vibe, culture. It's not for everyone. There were clear candidates that would never make sense in your culture. And it just occurs to me that you're feeling that too as you're assessing the bank and its executives. And I'm just kind of curious, Joe, am I right? Did I storytell accordingly about Bridgewater there?
You nailed it. You nailed it, man. No, I think it's certainly something we're really proud of. It's something that, is dynamic. You can't just put it on the shelf. I mean, it's living, breathing every day. I think it's a lot of the little things that really kind of bring it to life and sustain it, through, Mary Jane being culture champion #1 at Bridgewater, and her moving to the board. I mean, I think there was always concern that, what does that do to the culture of Bridgewater? And I think fortunately, it's not tied to one person, so we all contribute to that. And I do think it dovetails with Mike's point around owners. So something that we really pride ourselves on is an owner's mindset, an entrepreneurial mindset, and with that, we more widely grant stock to our employees. So kind of like the Hy-Vee model of Hy-Vee's a grocery store up here. Everybody's an owner. I think we want everyone to operate that way, and so we grant stock to align shareholder interests with employee interests with culture. We think that's really important. And then that compounds on itself, and that comes up a lot too from a shareholder perspective. When we meet with investors, we always remind them that management and the board own 20% of the company. So other than Mike Howard, our management team is most incentivized to also maximize shareholder value.
Which means also we see that show up in kind of running the numbers, running the math. So when you think about capital allocation, I mentioned earlier that the debt markets are open and the equity markets seem to be open. Doesn't necessarily mean that debt or equity is the right answer for Bridgewater or for any bank. Management teams that have heavily vested interest themselves tend to run the math quarterly, semi-annually. Is preferred the right option? How do we limit as much dilution as possible to still achieve the strategies we want to achieve? And I think Bridgewater has done a really good job of kind of running the math quarter to quarter and understanding what type of capital will serve their strategy needs, while at the same time minimize dilution to management and to AllianceBernstein and other investors.
100%. And I think it's to your point, Matt. I mean, that doesn't happen overnight. Like we have to earn that with our shareholders and with our investors and future investors. And so, I think it takes a long time to build credibility, and you can destroy it pretty quickly too. And so, being good capital stewards, operating under our owner's mindset is really important.
Yeah. Mike, for an environment that seems so positive as the equity and debt markets seem right now, kind of what's making you nervous? What are you seeing bankers do that's maybe giving you pause or you wish they wouldn't do?
We get paid to be paranoid. That said, I wouldn't say we're at a high level of concern right now as an investment team in the space. I think people that follow the space pretty well know that we, as an industry, had learned the lesson from 20 years ago. We always learned the last lesson really well, and so I think credit's been in a reasonable place for the last decade or two. Capital, we fought the credit and capital battle for 2 decades after the great financial crisis. And so, of course, it was something else. It was rates and liquidity that bopped us in the head in 2023. The industry's in a pretty healthy a place right now and running at good levels of profitability that look sustainable. And valuations still look in bank stocks, excluding the very largest ones, valuations still look very reasonable on a historical basis, which is in contrast to the broader stock market, which is more expensive in history. So even on an absolute basis, community bank stocks, banks, sub 10 billion of assets, are cheap to history and really cheap relative to the broader stock market indices. So if there's one thing that we can get kind of paranoid about, have a rough dream on occasionally, it would be the deposit game. What we can't see around the corner. Is it stable coin? Is it AI agents going out there? I think we're probably not quite as paranoid about AI agents squeezing every last basis point out of deposit spreads in the industry, because we think that's in effect been happening slow motion now for a couple decades. I mean, I remember when I was a strategy consultant in the 90s, and American Banker ran the page one article. Bill Gates had just called banks dinosaurs. They were destined for extinction in the short term, and that was the late 90s. So it's been happening a while. There's a reason that banks that do a community banks that do a great job for their customers can earn a positive deposit spread. But certainly, if there's something to be a little bit more paranoid about, I think right now, not being able to see around the corner would be more on the deposit and technology front.
Joe, are you feeling a similar tone from analysts, investors when they analyze Bridgewater and your bank? Are you feeling a certain tone, things that they like that you guys are doing, things that they wish you'd stay away from, whether that be M&A versus organic growth or certain types of lending, or how would you kind of rate the pulse of investors and analysts?
Yeah, I think that's I I think we get questions from investors. Bridgewater is I wouldn't say a concentrated story, but we have a specific business model that, certainly has gaps and flaws, but I think it also, you know, we believe over time, it provides, it's the model that we believe we can best control. And, we certainly feel like we have a place within this market and a niche that, certainly our clients appreciate. I think the biggest thing that investors, ask about for us, real estate, multifamily, affordable housing is definitely a niche of ours. We get the feedback that we don't do enough CNI, and I think there's always concern from investors that all of a sudden you're going to take CRE bankers and you're going to tell them to go find CNI, and you're going to pivot away from the things that have made you great. And so I think for us, it's most important to point back to a discipline. It's the same thing on the M&A front. Like we're an organic growth story first and foremost. We're 5.5 billion today. We've done 2 small acquisitions totaling 350 million in assets. But at the end of the day, we wake up and we grow organically. We could do M&A to grow, but I think there's obviously complications with that, and we don't have the model for that. There's other banks that do that really well. So I think for us, M&A is, how additive is it to the greater story? Are you going to stay disciplined on it? So I think that's discipline first and foremost from investors. That goes into the credibility piece that I talked about. I think those go hand in hand.
And Mike, I was going to say real quick, Brian, you mentioned M&A, Joe, which is good. So Mike, it seems like the markets haven't been rewarding companies at least day 1, 2, 3 after announcements on some of the M&A transactions they've done. From an investor standpoint, are you still favorable towards a bank making an acquisition? Would you rather than focus up organically, or kind of what's your mindset like today with M&A versus organic growth?
A couple thoughts. So my team, I think we are more open-minded about M&A. This is a consolidating industry. It's kind of a bizarre remnant of federalism that we still have 4,500 banks in this country when there's kind of 6 up in Canada. So we have a long way to go. There's a lot of common sense consolidation that'll happen over time, and the industrial logic to M&A when it's well executed is very strong. So we look. I think my team tends to be more open-minded, but I would say, to your point, investors at large there's been plenty of skepticism over especially the last half decade about bank and M&A. And I'd say there's probably 2 camps of skepticism there. There are some investors, I said earlier, we get paid to be paranoid. I think a lot of investors think they've gotten paid to be cynical about bank stocks, the way especially community bank stocks, have traded for the better part of the last decade. There's a bunch of investors out there that no matter what are going to believe every M&A deal and every capital raise is so that the bank CEO can get paid more. They're going to show you the chart of asset size versus CEO compensation, and they're that cynical that you can't convince them otherwise. My team does not follow into that camp, but that's out there. There is another camp of folks that haven't liked the numbers. So because of what interest rates did in 23, 24, because long rates went up so quickly, and banks had put on a decent number of assets in kind of the 22, 23 vintage timeframe, it upset the deal math, right? The rate marks were very significant. So an acquirer would have to print a deal and send their tangible book value down quite a bit in a lot of cases. And so for a few years, the deals that were printed had a lot of TBV dilution. When I talked earlier about what do we look for, a track record, the metrics that are most important to bank stock investors over time is EPS growth, TBV growth. So to take your tangible book value back significantly through an announcement runs a short-term risk to the stock price until it's proven out. So those are kind of the camps of cynicism that have been out there. Look, is the further we get away from 22, 23, 24, the pain of the rate marks has ebbed. The deal math is penciling a lot better now. TBV dilution's less significant. Earn backs are quicker. And so investors can get back to paying attention to all the other stuff that's actually really important in deals. Cultural fit, how the scale can make the company better and more profitable and operate going forward. So you're starting to see that. I would say there have been some all-cash deals announced this year in the industry, and all-cash deals are always more dilutive to tangible book It creates goodwill, and yet the market has not really penalized the acquirers in some of those cases. Shows you that maybe there's a new constituent of investor that's starting to come back into the space, that's more open-minded, thinks more broadly, and doesn't focus just on one metric of success. But it shows the market generally is starting to warm up to bank M&A.
Ryan, you mentioned executive comp as banks grow, so I can only pass the mic back to you for that category.
Yeah, well, I had some questions related to talent, and I'm trying to kind of weave it into maybe an investor's perspective. Michael, you just mentioned how deposit generation is something that maybe gives investors agita. I don't know. Is that fair? You said you get paid to be paranoid, which I thought was an interesting quote. But I guess I wanted to ask you about, in your mind, are there banks that have kind of cracked the code on deposit generation in your mind and that you invest in or would feel comfortable talking about? And what have they done?
Yeah, I think I'll stay away from championing particular banks and their names right now. But I think there's a perspective out there that I would say generally my team has ascribed to over time, but we make it, with some exceptions, which is a lot of the value in banking generally is created from the right-hand side of the balance sheet, is taking good care of your customers. And when you do that, you can generate good deposit spreads. And that allows you to make money, but also make money without taking as much credit risk. Now, there's many different formulations to make it work for customers and shareholders, and certainly Bridgewater is an example of a different business model that's controlling is different things, doing a great job for both deposit and loan customers, really operating well in their kind of chosen niche. So I think 10, 15 years ago, we were much more focused just, community banks with great deposit spreads run by owner operators that potentially in the long run participate in industry consolidation. And today, I think across our holdings, we have a lot of those types of holdings, but we also have owned banks like Bridgewater that have a slightly different business model and really dedicated to success for shareholders.
And I see Joe nodding, and I want to let Joe jump in here. But one thing I also know about Bridgewater is they have a specific title on their executive team, Chief Deposit Officer, which not a lot of banks have. I got to be honest with you. And you're even at your size, you're even more of an anomaly to have that role. And I know Lisa was your CDO, and I think Katie now is.
Yep.
I wanted to ask you about that role, why you felt it was so important, what it is exactly. And then I'm not sure if there's anything Michael was just talking about that you wanted to respond to.
Yeah. I mean, the role itself, like to Mike's point, the importance has always been there. I think where we felt like we needed to actually call a specific role was to signify the importance, to the organization and to the market that, deposits are the lifeblood of not only Bridgewater, but certainly the industry. And I agree with Mike, the value of the company. I think for us being a commercial bank, we only have 9 branches. For being a $5.5 billion bank, we definitely have a pretty small and strategic footprint. So I think, you cast the net not as wide, but we're fortunate to be in a market that has US Bank and Wells Fargo control 65% of the market. There's been tremendous M&A consolidation here in the Twin Cities to where now, Bridgewater is the largest locally led bank in the state of Minnesota. And I think the opportunity for us is tremendous, both on the loan and deposit front. But I think the chief deposit officer role was, we talk about it every day about growing deposits, and we felt like, well, let's create a specific role, let's give it a title, and let's really champion it throughout the organization. And so, again, it's something that's evolved. We put that role in place in 2018. Lisa first started in that role and did a fantastic job, and now Katie Klug is in that role and is doing an amazing job too. So it's certainly the top priority for Bridgewater today and will be tomorrow is growing deposits. And I think there's no one silver bullet. I think we try a number of different things, try to focus on some niches that we have. We always talk about niches to riches. I think there's a lot of different ways to do it, to Mike's point, and it's a constant challenge and battle. And I think for us, it at the end of the day goes back to how we can best serve our clients and create that human connection for them and support them with kind of a technology solution that can compete with some of the largest banks in the country.
Yeah. Well, I appreciate that response. And
yeah,
for letting me take you guys down the deposit generation rabbit hole. I wanted to ask one more talent related question around succession planning, and then I want to maybe bring Matt in to get some of his thoughts on the industry, on M&A as well. So, Michael, obviously succession planning, that's what we do. We help banks find the new generation if they don't already have them on their team. How do you look at executive teams and aging out and what's kind of ahead of us on the talent side from your perspective, from the investor perspective?
Well, so I mentioned earlier how important we think an owner's mentality is among the management team. So again, I would highlight that as kind of an important part of our philosophy. And if you're doing that right, then you're growing. Then it's not just the CEO where that's the case. If you have an incentive compensation scheme that really encourages the management, the entire team to be. I mean, Joe talked about how deep in the organization they spread the stock plan. Then it helps with creating the right types of opportunities in terms of succession planning. I also mentioned earlier, it's a consolidating industry. We don't need 4,500 banks. Sometimes when there's an owner's mentality around the boardroom and the management team, the successor ends up being another bank. So I'll throw that out there. I don't know if you're expecting that answer.
Interesting. Yeah. And Joe, you were the CFO. You're now the president. So Bridgewater is kind of living and breathing the actual succession piece. Just what's the general kind of credo around succession at Bridgewater?
Yeah, I mean, I think it's again something that has to be dynamic. I think we're always required to have these succession books to give to the regulators to show that we talk about it, and it's not until you have some event within your management team or board that then you truly dust it off and actually think about, well, how do we actually implement this? And we had an event like that in our management team, and I think it really prompted everyone to take it more seriously and be really planful about it. It can't just be an org chart that isn't living and breathing and isn't go to multiple levels within the organization. And I think there's no one size fits all either. Like in a perfect world, yes, we would develop all of those individuals internally, and we would just pick from internal talent that we've groomed over years. But I think to your point, I mean, to have a partner like Travillian to not only once but twice, where we've really used for our chief deposit officer and also for our chief technology officer, I think there are times where you got to go outside of the fence to find talent. And so I think this most recent round of succession for us, where Mary Jane Crocker moved to the board, Jeff Shellberg, our employee number 2 and founder of the company, is retiring in October. He's moving to the board. I mean, we were really fortunate that we had 3 individuals internally that have been here for a long period of time and were able to elevate to the management team. And so we have 7 members on our strategic leadership team today. 3 of them are within the last 12 months, but they were all internally sourced. So I think it's super important, I think, to go to much deeper levels than you imagine. But I do think it builds, real buy-in too, because people that are multiple levels within the org can see a path for themselves. And maybe it's not on the C-suite, but it's certainly into more senior levels within the organization. So we really take it seriously, and like I said, it's dynamic and living and breathing every day.
That's great. So again, that entrepreneurial mentality. Now, I do want to bring Matt in. Matt, we want some of your wisdom here from everything that we've talked about. What are you seeing from your seat as an investment banker?
I mean, it feels like a really strong environment for whatever a strong bank wants to do. I think, we look at the world a little bit differently than others. If we're talking to a bank, we want to understand that bank's strategy, maybe in a multi-scenario view. So if rates go up 200 basis points, goes down 200 basis points, are they able to achieve their strategy? If we stay around the same area we've been in, strong credit, continued strong growth in earnings and tangible book value, it seems like the access to fund that strategy through capital is going to be there at very reasonable levels. So we would expect more debt to be issued, more common equity to be raised. Again, as long as credit stays benign and bank valuations stay strong, I just think you'll see more activity, more transactions, and more capital flowing through great banks like Bridgewater with the help of investors like Mike and AllianceBernstein.
So then I guess I'm going to kind of go around the horn here and just say, predictions for the next 12 months in terms of capital markets and M&A. Matt, what is your prediction? You kind of gave it to us, but
I think it's going to be more of the same. I think as long as the markets continue to behave, the world seems to look past kind of bumps and blips that occur globally. I think it's going to see a continued robust market in capital raising and M&A.
How about you, Michael? What's your perspective? What do you think happens over the next year?
I'll echo Matt's opening stanza. I think capital will flow in this environment. I think there's good positive NPV uses for it. I think we'll have more M&A in the second half of the year than we had in the first half of the year in terms of deals announced, and community bank stocks will continue to appreciate.
Love that. How about you, Joe? What do you think?
Yeah, I would echo the two experts. I think it does go back to dynamic planning, scenario-based planning, and I'd be remiss to not say that PT is a fantastic partner of Bridgewater, has been for a very long time. It has helped us in multiple capital raises. I think most importantly for PT, I mean, Performance Trust is just the scenario-based planning for the events that you don't necessarily, it's always, this wasn't on my bingo card. And I think if you have a thoughtful and disciplined approach to growth and capital planning, PT really helps lay out a lot of different scenarios in very different rate environments. And I think like I said, the last 5-10 years have shown us how different, the environment can change, and you need to have, strategies that can pivot and flex, and you need to be able to have optionality. And so Performance Trust has been a phenomenal partner for us in kind of walking that path and thinking, not just over the next quarter, but ultimately over a much longer horizon.
Nice. Joe, 2 unsolicited testimonials for Travillian and Performance Trust. I mean, this is gold. We can extend this another 10 minutes if you want to talk more about us.
Yeah. Well, AllianceBernstein too, been a phenomenal investor partner too. So there you go. I hit the trifecta.
You did awesome.
Hey, you're not so bad either, Joe.
Thank you.
Matt, I guess, just wanted to throw it to you. If there's anything else you wanted to ask or before we adjourn here, I had one fun question, but I wanted to throw it to my co-moderator.
I think this has been great. Appreciate both Mike and Joe spending some time with us. And I know, Brian, you and I live in this world and are really passionate about it. So appreciate Travillian hosting all of us.
Yeah, my pleasure. So one fast little question I like to ask all my guests is favorite movie or best movie you saw most recently. I'm a movie guy. I'm a little Lego camera my son made for me over here. But Michael, give me your film pick.
That's too hard. Of all the that's harder than which of the 4,500 banks is best. Disclosure Day was the most recent.
What'd you think?
I thought it was pretty good. There seems like it's a lot of tough critics out there.
I was kind of like this.
I guess everyone's expecting, it's a high bar that Spielberg set. So
yeah,
I think that it came into it with that, but I thought it was pretty good.
We should do another podcast just about Disclosure Day because I have a lot of thoughts, but we're not going into that. How about you, Joe? What's your speed? What are you watching, or what do you love?
I mean, my favorite movie of all time is Braveheart. I just got to go with just the underdog story of the Scots. I actually watched it last week, so can't go wrong with with the themes within that story and vintage Mel Gibson.
Yeah, I know the owner of the Bridgewater management team watches Braveheart like every Monday morning. You got to play
exactly.
You get the team player.
Hey, that's right. Longshanks is JP Morgan. So yeah.
That's awesome. All right, Matt, round us out. What's your favorite film?
I'll say there's so many, but I constantly find myself quoting both Princess Bride and Goonies. I'll be around my kids. So those are 2 classics that, no one can go wrong by watching those for sure.
Princess Bride is so good. So good. R.I.P. Rob Reiner. Yeah. Well, nonetheless, thank you all so much. Actually, I will say I do get a lot of optimism about our industry from all 3 of you. And that's great to hear because it's been a little bit of a kind of wild ride these last few years. So let's hope that carries into the second part of 2026. Thank you all so much for appearing on today's program, and good luck in your future endeavors, everyone. Thanks for joining.
Thanks, Brian.
Thanks, Brian.